Welcome to TradeTheNBI.com. This is John's report. It's for the 21st. And well, yesterday was just more of the same. We pushed back up to the highs, a little bit of sell off in between there. This is all a bull run situation, and they've got to perform. No real short activity whatsoever. It's just a complete capitulation from that standpoint. But that makes it tougher for bulls to drive things, and they're looking for some excitement. You've got NVIDIA coming up this week, so that could provide enough impetus for, depending on where it's at, to drive things. It's an interesting one because you can always see, with inflation and everything else, rising profits, but is it relative to, the devaluation? That always becomes the interesting question. And so you'll get a rise just by virtue of inflation. So, performance wise, the question is, what is the guidance going forward? Are consumers getting, squeezed even tighter? You get more and more evidence of that, but that's okay. Government is still spending quite a bit of money to keep things afloat, and that will work. And of course, with treasury yields nowhere near where inflation is relative, of course, they're saying the rate of inflation has decreased, but that hasn't changed the fact that it's still up there and continuing to rise in an inflationary mode. So that's not going to change the effect of anything. And when rates are disproportionately not accurate to what's going on, where you're going to put your money, it's either going in commodities or it's going into the market. And in this case, put it into the market in commodities. So oil trading off a little bit. And again, this becomes an interesting one because we continue to watch and whether or not, you have the situation with tankers and everything still having problems navigating traditional routes. And then you throw in the fact that maybe there's just a reduction in economic activity that is reducing the amount of needed supply. That we always continue to follow. This has been a boon for the euro because as long as oil prices are weaker, the euro can rise up against what they see as impending softening from the Fed going into an election, which is something everybody expected. And we're on target with what you would expect during an election year, where they do whatever they can to make things as good as possible going into the election period. So that's always a boon for the market. But you can see we expected gold to make back to the highs, and it did that, fading off a little. And now you see cryptocurrencies catching up to that move. They're going to continue to rise as well because again, there's going to be that segment that looks for safety in other areas outside of it. Not a surprise. ETH made a big move to catch up, but it's been way behind. So the excitement there comes from the potential of the ETF situation, and it's got some catch up to do. It's getting closer. That was a pretty good move the last couple of days to really get it close to parity there. You can see from a 50K standpoint, pretty clean. We ended up with this huge spike that took us way over the top. We got up to the top there, but as soon as we got there, you got that NBI white cross coming right through there, and that began the start of modest, almost non-existent decline. But it did reset, shakeout, and all that. So potential for moving back is there, but again, there's got to be a justification for people to want to jump into it. And what we talked about before was that you would see these kind of moves where the morning started out big jump, and from an option standpoint, you got all those call buyers win in there, and then they erased all of the gamma from it. And that's just what you're going to see. And then as soon as the puts and the shorts go in there, they're going to lift it right back up. So that's going to be the intraday play within the broader selection, unless there's a momentum move. And obviously, you're going to see that early in the charts, but it hasn't changed from a daily standpoint. Something negative or a surprise that way, now that will be interesting because there's not going to be a lot of room on the exit, and that's why markets always fall faster than they rise. So all we can do is continue to follow the readings, go from there, and we'll continue to see what the macro environment is. But of course, with the election, obviously things are, juiced to the upside. And so if they don't meet those expectations, then it could get ugly. So we'll always keep an eye on it. But as always, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.